Velocity banking is actually a very simple concept that has been made very complicated, mostly because to really understand it, there are a lot of different variables and moving parts. And so, to keep it really simple, velocity banking is a debt elimination strategy. It starts with some form of compounding debt elimination, otherwise called debt snowballing, where you're allocating cash flow to pay off debt. Once you pay off one debt, you're reallocating that to the next debt. And so you're compounding your debt payoff. Starts there. Once you have enough cash flow, you have to have good credit so you can get access to a personal line of credit, a business line of credit, a home equity line of credit, and in most cases, preferably a first position or first lien home equity line of credit. I'm going to do another video right after this one, really elaborating on that first lien HELOC versus a second lien HELOC. But once you have your line of credit, it has to be large enough that you can take a lump sum chunk from that line of credit to pay off another debt or other debts. The premise is very simple. A line of credit is a simple interest daily calculation based on the average monthly balance. That's how the interest is calculated. Okay. Where other debts, such as a mortgage, car loans, student loans, and most other loans, they're simple interest, but the schedule is amortized, which means that over a span of 10, 15, 20, or 30 years, the amount of interest that you're paying is compounding, and you're also paying interest up front or in the earlier years of the loan cycle. So for every loan, it's going to be a little bit different, but there are many amortized loan calculators that you can just do a quick Google search to find one, put your balance of your debt, your interest rate, and you're going to see what you're actually going to pay if you pay the minimum payment on your loans. Now, some people say, well, I could just pay more to the loan and pay. Yes, of course, you can pay more to your loan directly and pay it off faster as well. The benefit of using a line of credit is that it's a revolving account. So you can put a lump sum of your money, cash flow, and income into the line of credit, but you can also take it out. So that gives you the flexibility to pay down the debt, but at the same time, if you need access, you can pull it right back out. Once you put your money directly into a loan, that's it. You can't get it out unless you're going to refinance the line of the mortgage or do some type of equity play to get that money out. So if you already have a line of credit and now you can move money in and move money out, it gives you flexibility to do that. Number one. Number two, because of the way the interest is calculated, even if the interest rate on the line of credit is 1 or 2 points higher than your mortgage loan or your debt loan, and in most cases, it's probably going to be equal or lower than other debts like credit cards and maybe some other debts that have higher interest rates. So that's a no-brainer, obviously. But if the interest rate is close, similar, or even higher on the line of credit that you're using to pay off the debt, to velocitize or to speed off the debt elimination process, the reason this is working is because your income and cash flow is going to sit in that line of credit for as many days of the month as possible. So let's just say it sits in that bank account, in that line of credit, for about 27 to 29 days out of the month. As a result, when the interest is calculated for the month, it's not calculated on the actual balance. It's calculated on the reduced lower balance for those 27 or 29 days, because your income and cash flow sits in that account and drives down that average daily balance. So your interest rate doesn't change, but the balance that it's being charged on is reduced. As a result, you pay less interest. Your effective interest rate is reduced. Now that frees up more cash flow. If you can free up more cash flow, you can reallocate that to pay off more debt. So this can speed up or velocitize the process of paying off debt. It doesn't work for everyone because you have to have enough income and cash flow to reduce the average daily balance so that it actually makes sense. It actually frees up more cash flow. Number one. Number two, you have to have good credit to get access to the line of credit, right? And number three, you have to be disciplined and you have to be someone who is going to pay very close attention to the dates. What I recommend is that you try to change all of your due dates for your expenses and your debts to the end of the month so you can pay everything on the same day, maybe the last 2 days of the month. And this way, for the majority of your month, your income and cash flow can sit in that line of credit, driving down the average daily balance, whether it's a personal line of credit, business line of credit, a home equity line of credit, first position or second position. The larger the line of credit, the lower the rate, obviously the better. And of course, the functionality that you can move money in and move money out because it's revolving is what makes it work. A first lien HELOC is going to make it much easier because you don't have to move money in and out. You can let it sit in the checking account, and it does the movement of the money is kind of automated because they treat the checking account as if you deposited the money into the line of credit. So Velocity Banking Simplified is using a line of credit to help you reduce your average daily balance using your income and cash flow to reduce that balance. So you effectively pay less interest, which frees up cash flow, which you can reallocate to pay off more debt faster. And because the line of credit allows you to move money in and take money out, you can do that and still use the same line of credit to pay for expenses, pay for debts by moving it out when necessary and doing that. Where if you're moving all of your money into the debt directly, then you can't get it back out. And as a result, unfortunately, it's not going to give you the same power and the same functionality. So every circumstance is different. Every client, every person's numbers are different. Credit is different. No one should just jump into this without properly assessing their situation, knowing your four numbers, your income, your expenses, your debt, monthly payments, and knowing what your liquidity and cash flow is, knowing when you can get to the next level of more liquidity and cash flow based on paying off other debts, and then having access to the line of credit. So these are all the components that have to come together and strategically plan and prepare to execute the strategy of velocity banking. There are some other rules that we have in play to keep you safe so that you're not over leveraging your line of credit. I liken it to standing on the edge of a cliff. If you're standing right on the edge and the wind blows, you can fall over the cliff. But if you take 10 steps back, you still have a really nice view, but there's enough room for the wind to blow for you to fall down and get back up. And so there are some rules and guidelines that I recommend that you use and you practice and implement to keep yourself safe in how you practice your velocity banking strategy. And so for velocity banking coaching, if you want support, mapping out your game plan, preparing, getting access to your line of credit. If you're not ready for velocity, then putting in a plan so that you can start eliminating debt immediately and then get ready so that you can qualify and you can start doing velocity banking. Then definitely take advantage of a free consult. I'm happy to go over what that would look like for you. My cost for coaching, there are different plans, different levels, depending on how much time you want to commit or have me commit to you, whether it's just a one-time, one-on-one, or an ongoing monthly. And there's other services that can be included, including personal and business credit coaching. And so ultimately, when we speak on one-on-one, we'll kind of customize a coaching package for you based on your needs. If this video is of value to you, if this helps you to better understand the simplicity of velocity banking, then please subscribe to the channel. Please like this video. Let someone know who will let someone know about this content, and take advantage of a one-on-one free consult, or go ahead and start schedule your first coaching session with me. You could just go to theapprovedguy.com/velocity banking. And I look forward to speaking to you soon. The link is in the description below. I look forward to speaking to you soon. Thank you for watching. Take great care, and God bless.